Welcome. In this video, we are going to analyze this Can XPR coin be 2 cents? Don't forget to subscribe, and please watch till the end to understand. When we take a broader look at the chart, it's evident that price movements have been following a downward trend line for quite some time. This bearish trend has repeatedly suppressed upward attempts, acting as resistance each time it was tested and pushing the price back down. This descending trend line represents a classic downward resistance structure, which is frequently observed and closely monitored by technical traders. The strength of this trend is especially apparent from the number of times price has touched the line. Each time the price approached this slope, sellers re-entered the market, and bullish attempts failed. This reinforced the psychological weight of the trend line, turning it from a temporary resistance into a more permanent pressure point. However, a significant shift has recently occurred. Unlike previous attempts, this time the price broke above the descending trend line with strong volume, finally overcoming a resistance that had held firm for a long time. Such trendline breakouts are considered critical junctures in technical analysis. When an asset that has been moving under pressure for an extended period begins to move in the opposite direction, it typically signals that the trend is either changing or has already changed. The price has now escaped the previous zone of selling pressure and is showing potential to enter a new bullish phase. That said, there's a key point that shouldn't be overlooked. Although the price has broken above the descending trend line, a retest of that line has yet to occur. In technical analysis, a retest is a vital concept. A move that begins with a breakout is only confirmed when the broken trend line is tested as new support. If the price pulls back to the trend line and holds firmly, bouncing off with strength, it validates the breakout as real rather than false. Retests also present a valuable opportunity for traders looking to enter new positions. A reaction from a newly formed support level gives traders a more secure entry point. For this reason, many experienced traders wait for the first retest after a breakout before opening a position. Since price has not yet pulled back in this case, the potential for a retest is still on the table from a technical standpoint. Additionally, attention should be paid to the volume in the area where the breakout occurred. If there was a noticeable increase in volume during the breakout, it strengthens the validity of the move. A breakout without volume often lacks reliability and may result in the price slipping back below the trend line. In conclusion, the long-standing descending trend line that has repeatedly acted as resistance has now been broken to the upside, an important technical development. However, since a retest has not yet occurred, it's too early to confirm the breakout as fully validated. If the price pulls back, tests the broken trend line, and responds with a strong rebound, it would be a highly positive signal in the eyes of both technical analysts and investors. Still, we must remember that relying solely on trend lines isn't enough. Other metrics must also be considered. Stay tuned and keep watching. When we examine the current price structure on the chart, it reflects a highly meaningful progression within the framework of Elliott wave theory, one that could easily serve as a textbook example. After a prolonged period of consolidation and correction, there are now strong indications that price has completed both the first and second waves and is transitioning into the third wave. This type of formation isn't just a technical pattern, it also represents a tangible reflection of how market psychology unfolds in waves. To begin with, the first wave typically marks the birth of a new trend. During this phase, most of the market remains under the influence of the prior downtrend, often viewing the initial rise as nothing more than a temporary correction. However, this movement is usually driven by early investors who buy in near the bottom. What follows is the second wave, a corrective phase that digests the initial rally. Many participants expect the market to resume its downward path during this time. This wave tests investors' patience, shakes out weaker hands, and acts as a filter for conviction. Then comes the third wave, typically the strongest and longest in Elliott wave theory. At this point, the broader market begins to recognize the upward direction. Optimism grows, volume increases, the asset gains traction on social media, and headlines like "exploding in price" start appearing in financial news. This reflects a shift not just on the chart, but also in collective investor sentiment. One of the key tools to help guide us through this phase is the Fibonacci extension levels. Using the length of the first wave as a baseline, Fibonacci projections indicate that the initial resistance for wave 3 is at the 1,618 extension level. This level is significant both technically and psychologically. If price breaks through it with strong volume, the next potential target is the 2,272 extension. Reaching this level would indicate that price has gained strong momentum and that a large portion of investors are positioned bullishly. Of course, the path to these levels won't be a straight line. Along the way, we can expect smaller pullbacks, periods of consolidation, and temporary corrections that may shake out less confident traders. That's actually a hallmark of a healthy uptrend. The price takes occasional breathers, but maintains its primary direction. Both the 1,618 and 2,272 levels are key zones to monitor, as they often coincide with areas of profit-taking, tracked by both algorithmic and manual traders alike. In addition, for the trend to remain sustainable, price should periodically hold above key support levels. In particular, the ending zone of the second wave can serve as a support level during any pullbacks within Wave 3. If price retraces to this area, it shouldn't trigger panic. Instead, such a move may represent a higher low and set the stage for another push toward higher highs, consistent with the structure of a strong Wave 3. In summary, the current market structure clearly suggests we are in the third wave of Elliott wave theory. This wave builds on the foundation laid by the first two and has the potential to advance with much more strength and conviction. The identified targets are the 1,618 and 2,272 Fibonacci extension levels. Reaching these areas will require patience and strategic planning. Price doesn't move to these levels all at once. It climbs steadily, step by step. When we take a broad look at the MACD indicator, it's clear that a rather striking setup is beginning to emerge. In particular, the increasing distance between the MACD line and the signal line over the past few periods clearly indicates that bullish momentum is gaining strength in the market. The upward slope of the MACD lines suggests that short-term moving averages are pulling well above long-term ones, and that this uptrend is currently backed by strong momentum. This kind of positive slope typically signals that a bullish trend is continuing in a healthy manner. It's not just the rising price that matters, but also the strength of the momentum behind that rise. The MACD's continued upward structure shows that buyers have taken significant control of the market, while selling pressure remains weak in the short term. Technically, this creates a strong foundation for the uptrend to continue. Additionally, the MACD line positioning above, or even approaching the zero level, further confirms the upward direction of the trend. If this positive divergence between the MACD and signal lines continues to widen, it could be a strong indicator that prices may reach higher levels in the coming days. Given that this kind of upward formation has developed on the indicator, it's only natural to expect this momentum to be reflected on the price chart as well. One frequently observed pattern in technical analysis is that MACD's upward movements often precede the beginning of a price rally. Therefore, if this current momentum continues, we may not only see a short-term increase, but also the possibility of testing new highs in higher timeframes. Of course, it's important to remember that markets rarely move in a straight line. However, such clear upward movements in the MACD often signal solid rallies following minor corrections. This indicator is especially effective in identifying potential reversals or key points where a trend may accelerate. If this bullish trend in the MACD continues to strengthen, it's highly likely that price action will respond with further upward movement. In conclusion, the current state of the MACD indicator shows that momentum is shifting upward, and that the market is gradually preparing to absorb higher price levels. If this positive momentum is maintained, we may very well see higher highs in the near future. The MACD should continue to be closely monitored. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.